Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart, and we're looking at post-election price action. And we can see that during the overnight session, the market rallied to the upside quite strongly. In fact, we have massive increase in volatility, so many bars for overnight session. So once I see this, I need to be careful and I need to be patient. I really need to do my analysis, and most importantly, I need to pay attention how big those bars are, because ATR can increase since there's increase in volatility, which means the stops are normally bigger because the bars are bigger. And you don't want to get surprised taking a setup thinking the bar is normal size and the stop loss is going to be twice as big. Okay, so be careful, don't rush things, do your analysis, measure the bars. Otherwise, you would need to scale down or just sit this one out and wait for market to subside. Now, the structure looked quite unclear. We have one leg break, second leg, or because we keep working hard, there can be a wider channel with overshoot. So as of right now, I'm going to be paying attention to this consolidation. EMA flat exactly in one of these bars, so I'm just going to be careful. I'm not really thinking about taking a setup because no bias. We're just in the middle of small consolidation and we are making low highs. So I'm not going to be thinking about buying here. There's no setup regardless. But I'm not going to be thinking about buying because empty room at the top, we're going lower. So I'm going to withdraw and respect the downtrend working lower, and prices are indeed breaking lower. So because the big pattern is not clear, what I'm going to do, I'm going to follow this individual trend, and I want to see second entry short at the EMA. However, we already have a break and a new extreme, so the downtrend played out. So now I'm going to wait and see what the price action will do. We have visual tool like a pullback, but I can't take it. We just do a break, push to a new extreme, horrible bar. So I'm just going to be careful. Market just open, and I'm observing the price action as it is breaking above the EMA. Okay, we are reversing. Downtrend played out, there is no bigger downtrend. Clean decisive push above EMA is indicating, okay, there's bullish reversal. And as always, there's always a reason to price movement. I need to draw the channel because it will help me to predict where the market is going to go. So prices are correcting. We have a new high for a central long, pullback. We're breaking below EMA, so I'm going to redraw the short-term downtrend. If there's going to be a second entry long, I can't really take it because we're below EMA. So what's going through my mind is I expect new high to be tested according to trendline rule, but I would need a high low above exponential moving average to confirm the second entry long, which form here, new high for central long, second entry long. But like we said, we can't really take it. Downtrend played out with the break, push to a new extreme. This is only third entry long, below EMA. I can't really take it. I still need to see the push above EMA and a high low confirmation setup. Once again, I'm following these short-term individual trends, because that's pretty much what's left now since the big bias is not that clear. No big pattern established. We have a break and push to a new extreme. Okay, so uptrend played out and now I can expect correction or possibly even reversal. But this is not happening because EMA keeps holding and we keep working higher and we keep working higher again and again. So what I'm going to do, I'm going to redraw a wider pattern like this because I have to explain why prices keep trending higher and keep trending higher. New high can reset for a central long. If I'm counting for longs at the EMA, I have to reset the count once each new high is made. We have only for a central long and we have massive bullish bar at the top of the move, breaking the trend line, so we have overshoot. So it looks like overshoot because we can see we can't even pull back to the EMA, break of the trend line. So now there's going to be a second entry long at the EMA. I can't really take it, so I'm just going to carefully observe price action. We're breaking the EMA, okay. I cannot really go along here just yet. We're below EMA. After overshoot, we can have correction, breaking the trend line, or even reversing the trend. So I need to see push above EMA and a high low above EMA due to overshoot. Can you get it? We cannot, and in fact, market keeps strongly correcting lower. So now I have to redraw my channel again. At this point, I still expect new high to be tested, but because this downtrend is in play, high low would not be enough. I would need to get a felt second entry short, but most importantly, I need to see push above EMA because overshoot can sometimes reverse the market. So I want to know how deep the retracement is going to be, and we can see we're still around 50%. Once we retrace at 60%, this is where we really need to adapt to a brand new trend. First entry short, downtrend played out. We have a second entry short here, but problem is our short-term downtrend just as a break push to a new extreme. So we can't really take it, especially since there's a possibility of this uptrend getting new high. But because we retrace now over the 60%, I have to draw channel wider because overshoot generated stronger bearish pressure We retraced too much of the uptrend, and we have to adapt to this trend working lower. So I want to see second entry short at the EMA, something like this. First entry short, can get a second entry short, pull back to the EMA, no second entry short, and we have a break, push to a new extreme. So the downtrend played out, unfortunately. No real setup. We have a nice clean push up, clean push down, but not easy to take a setup, but it's okay. There's always going to be a setup eventually. So now that we have a break in extreme, just following these channels, I'm going to definitely redraw the uptrend. And because market keeps going higher, it's basically confirming the reversal. And you can see there is no big trending structure. It's pretty much sideways consolidation. So once again, my best bet is to just follow each individual move. And once we have deep retracement, breaking the EMA, I'm simply going to adapt. So at this point, I'm adapting to bullish uptrend. I was thinking we may get a second entry long, but we broke the EMA again. We have second entry long, so this should be familiar to you because we had similar situation earlier, a few hours before. I want to see high low above EMA confirming the second entry long because this uptrend needs to get new high. So you can see, because I'm using the trendline rule, I know where the market is going to go, but I just can't get it set up yet. Breaking new high. Okay, so now I'm going to pause, looking to go long. We have clean one leg, break, second leg working higher. So definitely respect breaking new high. First entry long, second entry long I cannot take. We have somewhat of, actually this is high low, after new high we have to skip the second entry long. But high-low can be considered enough. Now it ended up working, but feels a bit too early simply because this looks too much like two broad legs up. Yes, there can be potential wider channel because the high-low worked for a small scalp. 11 ticks, we scalp for 8, but it's a little bit too early. If you took it for a scalp, I can't really blame you that much, but we just had a break, measured move as well. I gotta be a little bit more careful. And this is interesting now because I have triple test, one bounce, second bounce, actually multiple test, third bounce, fourth bounce, and we're back above EMA. So this is actually a decent setup. Multiple test, it's a little bit more advanced. I didn't take it, but price action wise, if you're a more advanced trader, you can consider because you can see that the market is not breaking lower. It keeps EMA holding here, here, and here. So we're probably going higher. The safer bet is to take high low because now I'm going to redraw a wider channel and I can trust it like this. But the high low never triggered. As you can see, this is the new low. First entry short, failed, but the bullish bar didn't get a trigger above its high. It stalled with an inside bar, so technically we unfortunately cannot enter, even though we have two key entry points, no entry. Market is correct, and I'm going to redraw the downtrend working lower. First entry short, we're breaking above EMA. Felt second entry short, but we cannot enter on inside bar again. And plus you would be buying too far up, you can't really take it. Sort of like a felt second entry short continuation, but horrible bar again. This is the new low, first entry short, pullback, like a visual one, felt second entry short. And we need to get new high. But look at the signal bar. Once again, context-wise, decent entry. But signal bar itself, it's quite weak. We have a break in new high, so now I'm going to pause looking to go long, following the price action rule. But market is telling me, okay, break higher. We keep working higher, and we keep working higher. So now I can see, okay, the market is still too bullish, and we keep working higher again. Notice how suddenly only first entry longs are working, and how EMA keeps holding every single time after breaking new high. That's not supposed to happen. So when I'm watching this and I can see so much price movement to the upside, EMA holding, I like to be looking for some wider channel. I want to get this confirmation. So first swing, second swing. Okay, I can see a lot of bounces here. So this is confirming there can be a wider channel. And you can tell that the overall move looks quite seamless. It makes sense to accept the fact there's a wider pattern because we don't have some super broad two legs like this. Of course, I'm over exaggerating here, but it looks more like clean push up. A lot of confirmations here. EMA is confirming this. We keep working higher, so I can trust this bullish trend. Price action is now in very easy mode, and we keep working higher again. Okay, the higher you go, the more you're trusting this uptrend. Okay, new high, first entry long. There is possibly a small break, or you can draw it like this. You can really see that the downtrend for the most part is in play, but I wouldn't blame you drawing it just a little bit tighter like this with the small break new low. Sometimes it's not super easy to fully know, and because the trend was strong, I have no problem risking a setup like this. Second entry long at the key entry point. You have to wait for trigger above this bar, drop your limit order. The setup ended up actually working for 11 ticks. We scalped for 8. So it managed to get the scalp. Market corrected because you can see there was the bigger downtrend. And generally, especially if you're new and you can't see clear break, just to be safe, draw it a little bit wider. Now you have a break, push to a new extreme, and the downtrend played out. So market moves in pairs of twos. One leg down, break, second leg down. What are we expecting? We are expecting new high for this strong uptrend. Okay. Now we have high-low confirmation setup. It's closing above EMA, but for the most part, it's below. It started forming below. So I have to mark a little bit more aggressive because above EMA it is much safer. But it's a decent setup. Can we get a failed second entry short above EMA? Yes, we can. I'm going to use the lowest low of the pullback where we reset the count. One attempt to sell. Push above EMA is confirming. We're about to reach the new high. Second entry short. It's gonna trap sellers because it's against the main bias. The main bias is bullish. So second entry long and a failed second entry short. It looks like the same setup, but it's a little bit different. It's still the same bullish setup because it's a bullish trade. But when you're counting for longs, you're counting from highs. You want to see two-legged pullback to the EMA. And the failure is when the correction plays out, you're going to use the lowest low and you're going to look if there are some sellers trading against the trend. And if it's above EMA like this, they're going to get trapped. So this is a failed second entry short, and this is awesome stuff. Look at the signal bar. We need to get new high. There needs to be a break above this bar. Your stop loss always goes one tick below the signal bar, one tick below the signal bar. You need to protect your trade. And market even offer you a little bit of a mini second entry long. So if you're unsure here, you have a now new high, first entry long, second entry long. So now you definitely can enter. This is what we can call add-on opportunity. If you're holding here and you get this setup, you can add on again. But this is way more advanced. We need to get new high, break, new extreme, uptrend played out, and we had nice set of trades. Now this was a strong uptrend, so I'm not going to really think like we're going to reverse on a dime, although I will follow the price action diligently. Break, new extreme, and we're back above EMA. Notice how if I draw a trend range, it's not even acting as a trend range. Every single high is higher, low is higher, so it's not acting as a trend range, it's still too bullish. So this means there can be some flatter channel, but I want to confirm it. Okay, market is correct. I'm going to redraw the downtrend working lower, and I'm going to redraw some channel. Can I find some good channel? Yes, I have confirmations here, confirmations here. Like I said, this is the secondary channel, which is less reliable than the first one. Remember, our first channel just has a break a new high. So when I'm using the secondary channel, I have to be less aggressive than if I'm using the first one. And the reason why I'm using the secondary channel, it's simply because after breaking new high, once again, why are we not correcting? Why we keep going higher? This is typical. Once there is a strong trend, there can be many channels working together because the trend is so strong and the bigger pattern is just unfolding. And I get confirmations. So let's see. I have a new high first entry long, second entry long. I have a high low, of course, I cannot take. I have a failed second entry short, which is almost tempting. But notice it is a doji and it's not full at the EMA. There's a gap between the body and the EMA. And this leg down broke below EMA and it may get the new extreme. So because we need to get new low, because it's a secondary channel, and because it's not at the EMA fully, I can't really take it. I really need to see something more convincing. Break new extreme. Downtrend played out, market moves in pairs of twos, just like here, just like here. And then we have one leg down, break, second leg down. Tempting. You can see it is quite late, so I need to see the high low of EMA. Can I get it? We need to get new high, no high low, push phase established, and now the market is about to close. So this is the overall structure for today. I'm glad the price action ended up stabilizing because it looked like it's going to be super fast, super volatile day. and eventually it ended up being quite a normal, boring day. We started with just a bunch of trends swinging up and down. We didn't really get that many setups, no good second entry while the trend is in play, but the second half, once the uptrend here started, it actually offered a few decent setups, especially this area here, a couple decent setups. So the election is over, the market is hopefully going to stabilize. It was a pretty quick review, but there's pretty much nothing else to talk about. We have to just follow each individual trend, and once the bigger pattern was established, trading got really easy. So hopefully tomorrow will offer more setups and the price action is gonna keep trending and trending. Either way, I hope you had a great trading day. I'm gonna wrap it up and I'm gonna talk to you next time. Good luck in your trading.